to make sure that as I was kind of doing some research on what's going on, that I would share that research and kind of let you know, yeah, what's really going on. And I think we're going to spend some time talking about that. I'm not going to talk about some really basic things, like what is a short trade or things like that. You can Google those if you don't know terms as they come up. But yeah, I really want to be talking about what's been going on with GME, and let's jump actually straight into that. So I have here in front of me, you can see this is some information, trading information about GME. Now, GME, according to most kind of analysts before this whole thing happened this past week, would say that it was worth a stock worth maybe 10, 20 bucks. And now it's at 380, so it's like, up more than 10x, almost 20x what it's worth. And the question is like, why? What's happening? So like the full story is that thanks, Fahad. Nice to have you join us. I by the way, I see every comment, so feel free to like jump in the chat and ask any questions or comment on what's going on. So here's the story, right? Like, so there's this Reddit channel, Reddit forum called Wallstreebets, and people on here, it's kind of like, well, they have this like kind of funny this description of the thing, which I can't find right now, but they basically say, what if 4chan found a Bloomberg terminal? So Bloomberg terminal is like where professionals like view their stock tickers, and 4chan is this like really kind of a crazy place on the internet where kind of anything goes. And so it's kind of these people who do like really serious like stock analysis, but then they just also pair it with just really dumb shit and memes and things like that. And so this is sort of an interesting mix. And what happened was, I don't know, I guess 6 months ago, like almost a year ago, maybe, somebody on Reddit started posting about how GME is undervalued, right? They would look at this and they would say, look, GME is priced, back then it was priced at like $5 a share. And they say, this is not possible. This is a nostalgic brand. Like, they have so much brand recognition. Like, all Gen Y and millennials know this brand. It was huge. And yeah, they had some trouble, especially with the pandemic. Businesses have been closed and so on, so they're like near bankruptcy. But they got a new injection of cash. Or actually, that happened afterwards. But this guy said there's potential here, and I don't think it's worth $5. I think it's worth double, triple that. So he put a lot of money into this. He like published kind of his analysis on Reddit, and basically for a long time nothing happened. Right? He was sitting on this for months and months, and then later on in the year, GameStop announced that they had like got a new round of funding, like they got a new management team, and they're starting to turn things around. But the stock didn't move that much. Like it sort of doubled to $10, $15 range, and that was basically it. And people were talking on Reddit about why this was and whatever, and some people were investing in it. But eventually, like, somebody realized that part of the reason why the stock is down so much is because of the short positions. And they realized that you can find this out, and you can see this here. You can see the short. I mean, I know there's a lot of stuff going on in this graph. Let me actually just basically get rid of everything except for estimated short interest. Exchange reported short. So this is what we want: the exchange reported short interest on GME. So it turns out that this is the number of shares. 61 million shares were reported to be shorted on the 15th of January. And if we go back, this number has been quite high, and you can see where it started. Right, like it started. I guess it was quite high before as well, but you can see that people are shorting this stock. Well, what is 61 million? What does 71 million mean? What do these numbers mean? Well, you can look at what are actually the number of shares available, and where do I see that? Well, I know that it's somewhere like around 40, 50 million shares. So it turns out that the amount of shares that are shorted is 140% of the amount of shares that are available to buy. So they call this the float. This is like the amount of shares that are like floating on the market that you can buy. There's a little bit more shares than that, which are privately held and not market tradable. But but yeah, it was, or it still is like over 100%, which means, and you might ask yourself, how is that possible? Well, it's illegal to sell short a share that you don't own. But what is possible is that if you short a share, then the person who buys it can loan it to someone else to short it again. So that way, like a one single share can be shorted several times. And so what it means for a share to be 140% short is that each share was sold 1.4 times short. Which also means, kind of by logic, that the share is like 240% long, right? So 240% of people own that share, or they think they own the share. Of course, they own it in the sense that they bought it from someone who borrowed it. So that person didn't actually own it, and the person they borrowed it from still owns it, right? So now two people own the same share. So there's now questions being asked whether shorting itself should be legal or not, because it's so kind of controversial that people are basically just kind of gambling on the share price up and down on both sides, and whether maybe it just makes more sense to say there's so many shares, you can buy them, you can't sell them short, you can't borrow them from other people, and maybe that would make things simpler. But as it is, it's legal to short shares. There's no limit to how many times a share can be shorted. Maybe that should be changed, but certainly it's like a very risky thing to do. If a share is so short, there's the potential for a short squeeze, and that's what happens. If you don't know what that is, a short squeeze, you can look that up. But the short squeeze is like very strong here. So yes, Fahad, I'm gonna show you what I have here. You asked for what's the numbers for the week. Can you highlight the volume today? Where's the previous days this week? Very good question. The volume is up enormously. So if we go to the 10-day chart, you can see that. Okay, let me see. I think I have after hours. No, it's off. So the volume today has been quite low. Let me actually check the frequency to daily. So we have a daily volume of 58 million to yesterday, versus a week ago, right, would have been the 21st, 57 million. So yeah, we're up a little bit on volume from this day last week, but of course, like Friday last week, Monday, Tuesday, Wednesday were like insane volume, 200 million almost on Monday, on Friday last week. So the volume is huge in the last week, and I'm going to explain like what a gamma squeeze is, and a gamma squeeze is why the volume was so high on Friday. So I'm going to explain that in just a second. So Nat and Talia just joined. Do you think it's wise to buy GME pre-market? I can't tell you what's wise. It's everybody has to decide for themselves whether they want to buy a stock or not. But I'm going to explain actually, and this might be helpful to explain what a gamma squeeze is. So a lot of these people on Wallstreebets, they're not actually buying the shares outright. Okay, so what they do is they're buying options, and the reason for that is that they can do this thing called a gamma squeeze, which is kind of like it's kind of like a short squeeze on drugs. So the way it works is, if I would buy, if I would have gotten in on this last week and bought GME at or early this week and bought GME at $100 a share, then if I want to buy 10 shares, I have to pay $1,000. I could maybe get some leverage with my broker, but there's only so much shares I can buy because the price is already quite high. But what if I say I'm going to buy some options to buy the share at, if I had seen this last week or early this week at $100, and I say I want to buy some options that it goes to 300, right? And now the price of those options, it's kind of also like they're floating on the market. What was the option price last week for $300 shares? I don't know, but maybe it was probably quite low. It was probably like a couple bucks for those options. So if I now put $1,000 in, I could get options for several hundred shares, right, to buy them at $300 each. So I put in $1,000, the option to buy the shares at $300 each. I might get the option on 500 shares doing that, right? Thanks, Ollie. 138%. By the way, the short interest, that's not up to date. Unfortunately, there's no live information on short interest, so you do need to take this with a grain of salt. We don't know what the short interest is today. This is the last update from January 15th, which is already 2 weeks ago. So, but yeah, so the gamma squeeze is this situation where you can kind of like leverage like really massively a push on a stock that you think is going to go up a lot. So what happens is you buy the options for the share at a higher price than what it's trading at. And the banks that you buy those shares from, they typically hedge the option by going and buying the share. So if you buy the option for 500 shares at $300 a pop, then the broker is going to say, okay, if this share goes anywhere near that price, we're going to go and buy the shares just to make sure that we are not making a loss on the option. And so they're going to end up buying 500 shares just to like hedge against your option. And well, it would have cost you way more money to buy those 500 shares than it was to buy the options for 500 shares. That's why, and so the squeeze part of it comes from the banks buying the shares as a hedge, driving the price up. So if a lot of people are buying options, the price of the share will go up like dramatically. And this is what's been happening. And this is especially what happens on Fridays, because on Fridays, the options expire. So usually you can always buy options to expire in like 1 week intervals. So there's options expiring on the 22nd. There's options expiring today on the 29th. And that's why we should expect to see a lot more movement again today, especially if Wallstreebets and all these other people are piling in on this again. And like I would think that with the amount of media attention this has been getting and people educating themselves about how this all works, we should see a lot more interest in GME today. And if people are buying these call options, forcing banks to buy the underlying shares as hedging, this will drive up the price massively. We don't know what that price will be. So I wanted to talk about a few other things, and specifically about front running. So you have to be like really careful with the apps that you're using to trade. So a lot of people are using Robinhood or these kind of apps, and that's actually not a really smart idea. So what these apps do, and I'm gonna give you some advice now, not financial advice, but where was this? So, oh man, now I can't find it anymore. But what they do is, here we go. I think it was this one. Yeah. So what they do is they those apps like Robinhood. Here's the bad ones: Robinhood, TD Ameritrade, Fidelity, Charles Schwab, E-Trade. These are all the American ones. I don't know about European ones. I personally use eToro. I haven't checked into whether it front runs, but what I do is I set orders at specific prices to prevent that. So what a front run is if you use these apps and you tell it, I want to buy $100 of shares in GME or whatever, what they'll do actually is you haven't set a price. So you'll buy it at whatever the market price is, right? And they'll send that order through to execute. But before they do that, they'll send this information that somebody is about to buy these shares, and they sell that information to other people. They sell it to Citadel, they sell it to other companies. And those companies will then buy the shares like a microsecond before you do and sell it right back to you at like 1 point higher. So you always will end up, if you set a market price order, you will always end up paying like a little bit more than what the market price actually is, because these companies, Citadel and so on, are actually front running you. Front running just means they can buy on the market faster than you can, because they have these high frequency and high speed trading systems. And so if you don't want that to happen, you better get away from these kind of apps and head to there's a lot of other trading services that don't do that. And so I don't know if none of these do sell the trading information, but apparently they don't work with Citadel. And Citadel has been in the news because they're the ones who have been supporting the short selling and have been trying to stop the short selling of GME and things like that. So I have a question from Aitna. If the volume peaks today, I can show the questions as well. That's pretty cool. If the volume peaks today, could we see the max peak as well? I'm not quite sure what you mean with that. The the volume might peak today. I mean, look, it's at 58 million yesterday. Last week on Friday it was 197 million. So I think we might break 200 million today, but who knows? So trading opens in 2 hours. So the price peak. Yeah, I mean, for sure, if the volume is correlated with the price, I think. Selling order flow data is illegal in the UK, EU, which T212 operate in. Thank you, Ollie. That's a really nice advice. So it is illegal in the UK and Europe to sell the order flow data. So if you're in the US, you really have to watch out. But if you're here in Europe, maybe it's a little bit easier. Of course, you don't know if they're breaking the law or not, but certainly they would face regulatory action if that came out. Natalia asks if I'm nervous. I am nervous. I actually don't own any GME. I came to this party too late. And also, I want to buy options, but my broker doesn't allow me to buy options. So I right now I'm looking for a new broker, but that's going to take me a little long. So here's the other thing. So I explained gamma squeeze. I want to talk about a few other things. One of the things I want to talk about is some of the other stocks. So like on Wallstreebets, they talk about a lot of things. They talk about AMC. You might have seen some stuff about that. Oh yeah, I want to talk about the trading halt. So this was big in the news that people who are using some of these apps, like Robinhood, like TD Ameritrade, they were not able to actually put in orders for GME in the last few days, and apparently that's going to be turned back on today. So we're going to watch the news really carefully to see whether people are able to buy these stocks again. And this was really controversial. And so, well, there was also these conspiracy theories, like was it because what was it kind of blocked because those short sellers didn't want to lose their shirts, and so they had trading halted so they could kind of like get rid of their short positions. So I've read some things which I find convincing that this is some regulatory issues. There's some really nice threads on Twitter kind of explaining what's going on, and it has to do with the Dodd-Frank regulations in the US, which require that trades have a certain collateral behind them. And so when there's a lot of volatility, when the price goes up and down a lot, then you have the situation where the brokers like just don't have the capital to put up the collateral for the trades, and so they choose to shut down the trading so they don't go bankrupt. So trading 212 have enabled trading again. It was blocked for 2 days. I had a similar experience with eToro. It was blocked for a while, but now it's enabled again. I believe there's some stocks now that you can buy but not sell. There was a moment where you could sell them but not buy them in the US. Yeah, it really has to. So I don't know about the blocking for the selling. That doesn't make that much sense. But I imagine that maybe it's a situation where they make their own market internally within the app, where they say we let some users buy and some, from each other, because all the shares that users own, we have the rights to them, so we can let them trade with each other, even if we don't have access to the market because of this collateral requirements. But then, if there's a lot more short, selling interest than buying interest, then like how do you make this happen if people are trying to buy and sell at the same time? And so what they might do is they might say we're going to just like selectively allow some users to buy and sell just based on how much interest there is on each side, to make sure that it's possible for those trades to happen, and then they can keep the price accurate according to the market, even though they're kind of making their own market. So that's what I think might be happening with some of those brokerages. But the real issue is the 2-day. They have a 2-day clearing period. So stocks, like, for some reason, which is really stupid, it takes 2 days between the banks that own different stocks to settle the trade. So like if I'm buying GME, then the person who sold me the GME, their bank has 2 days to transfer the rights to the stock to my bank. And within those 2 days, there's a risk that one of those two banks might go insolvent, might go bankrupt, and so to like secure against that, there's this collateral requirement, which is just money that they have to deposit to like kind of like secure those exchanges. And so that money requirement, there's a specific formula that's defined in U.S. law what the money requirement is, and it's based on a lot of different things, including the volatility of an app of a stock and some other things. And it meant that the collateral requirement for some of these traders went like way up for these clearing houses went way up, and that meant they could no longer process those trades because they didn't have the collateral. And so there's a great there was a video on YouTube about the Webull CEO going on a news show explaining this, because Webull is another trading app that is loved by a lot of kind of retail small investors. And they had to stop trading, and they said they argued and complained with and had a shouting match, had a big discussion with their clearinghouse about this, and the clearinghouse just said, "There's no way we can do it. We just don't have the money, and we need to put in 100% collateral for every GME trade, and with the settlement provider, and we just can't do it." So so there's that's my understanding of why it's was not possible to buy GME on some of those platforms. They could still sell it, because of course when you sell a stock, there's no collateral requirement, because you're getting money, you're not giving money, right? So like one possible solution in the future would be to say have the money be in some sort of like accounts where it can be transferred between the broker and the clearinghouse faster, right? So if those apps like Webull had a direct bank connection to the broker and the settlement provider and the clearinghouse, the money that you deposit in the account could be transferred directly to the settlement provider as a collateral in these kind of situations, so people wouldn't be stopped from trading. But that's not a system that exists at the moment. So that's part of the reason. Like, of course, they could make a new agreement and say, look, we have the money. Webull, for example, has the money sitting in the accounts. The users deposited it, so why not use that as collateral? But there's just systems that are just not set up that way. So so that's the situation with the trading halts. But they're trying to solve that. As I said before, they're going to reopen a lot of the trades again today, and so we're going to start seeing that in 2 hours when the markets open, whether all users are able to trade again, and that should see us having the that should see the volume rise again, and we should see more trading happen. So if we turn on pre-market and after-hour trading, for some reason it doesn't show now. It was showing before. I think I need to make it like so as you can see up here, the price is at 352 at the moment. Here it's listed a little bit lower. That was the market close price, and now these are the hours or pre-market prices. There's as I said, there's a few other things. There's somebody who posted on Wallstreebets about the National Beverage Corporation, which the ticker is Fizz. There's some really interesting things going on here. So basically, what Wallstreebets is finding is a lot of these short positions where a lot of hedge funds have been putting a lot of money into shorts, and so whenever there is huge short interest, then there's always the potential that there's going to be a short squeeze. This is what happened with last year with Tesla. Obviously, Tesla's share price multiplied by 8 or something like that because of the short squeeze. And I think that's really interesting. Chamath, who's a big investor, Social Capital, he had a lot of comments about this whole phenomenon of like the revaluation of some of these companies. A lot of fundamental investors look at Tesla and say it's not worth $800 a share, but retail investors do believe it's worth that. And Chamath saying this is a redefinition of what value is. It's been kind of like defined by all these Wall Street people and by finance academics, and the value of a share, that's something individual, that's something subjective. Like people can choose to value something like that according to their own interest and their own desires. And so if people value Tesla much higher than its revenue and so on, that might be for a lot of different reasons. It might be because they see the future being much brighter for this kind of company. So if the company like grows 100x in size, then at some point it will be worth that. It will represent that value that the share is now reflecting today, in terms of its as a representation of future value. On the other hand, it might be for some other reasons. For example, people might say, I choose to invest in things that are pushing the world towards sustainability, and so whether or not Tesla makes money, I want to own Tesla stock because that's making the world a better place. And that's a kind of value that has nothing to do with revenue and profits, but that has something very important to do with the world and the way we choose to attach value to things, right? So the idea that shares only have value because of the profits the companies make, well, that idea, that's what's dying. And this is making a lot of Wall Street people very, very uncomfortable, because that's what their whole business is built on. And I think it would be really interesting to see. I mean, the really interesting thing, of course, about these kind of inflation of prices, Tesla now is worth more than a lot of car companies, that sell 100 times as many cars as Tesla. But what the share price enables Tesla to do is to raise money at a much, much lower cost than these other companies. So in a way, this is sort of like a free market answer to how do you subsidize sustainable technology. Well, it's very simple. If you're Tesla can go and issue more shares and raise a lot of money very easily, because the market has demand for their shares. They can also go to a bank and say, hey, look, our shares are worth $800 a pop. We're worth $300 billion. Whatever it is, I've lost track. But and they can get a loan on that and use that to finance the increase in production and so on. So this is a way that average people can actually support sustainable initiatives by investing in those companies, buying the shares of those companies, helping to drive up the share price, and giving those companies more resources, more capital to be able to kind of accomplish their mission. And so, yeah, this is a real kind of change in the way that free markets work that we're seeing. And I think that's really, really fascinating. So I think that that sort of brings me to I'm gonna have to check what I wrote in my description. Frontrunning. Oh, Dogecoin. So Dogecoin has been going through the roof as well. So what is Dogecoin? What is that? Is there a Wall Street Bitcoin now? I've never seen this. Okay, no idea what's going on here. Dogecoin is a cryptocurrency. It's like it's actually a complete meme currency. It was made as a joke. It's a total like copy of Bitcoin. It has like, there's nothing unique about it. And it was if we look at that's not what I want. If we look at the price history, it's been kind of going up and down, but as you can see, it's sort of, it's it's less than 1/100 of a cent at times, and so the price is really low. But if we look at the last week, it just suddenly had this explosion, right? So up and to the right. So it went from less than 1 cent a share to at its peak yesterday or this morning, very early this morning, it had a peak of 7-8 cents a share. So it's at about 10x here in the course of a few hours, and that's just because some people on Reddit and maybe on Twitter have been talking this up and just made it pop a little bit, and just for the fun of it, I guess. We talked about front-running, Dogecoin, BlackBerry, Nokia. I talked about AMC. BlackBerry and Nokia also have been experiencing a little bit of a pop because of this whole shorting position. These are both companies that are heavily shorted. I don't know what the short position is actually. I guess we could look this up now. Let's see, BlackBerry. I'm using this thing because I couldn't find out where I can find short interest on MarketWatch. But for some reason I can't actually change the stock here. Let me Google that. Vortex short interest. There we go. Okay, so I need to sign up for that. So that's why it doesn't work. So let's just Google it, short interest. So, okay, so it's actually very small. I don't know why people were talking about that. Let's look at AMC. Maybe it was something else. I think there was also this situation where like people on Reddit were talking about Bed Bath & Beyond and some other companies, and people got confused with the tickers. So, yes, AMC and Nokia. There was a few others. So sold short 44 million shares. Outstanding shares 52 million. Okay, so this is quite a high percentage. I don't know why this number is zero. It's been doing that. I looked at this site before and it had the same issue. But if you look at this current shortfall in 44 million shares and outstanding shares is 52 million, then you can see that that's just crazy. That's almost 100%. And you don't know how many of these outstanding shares are actually floating on the share market. So this is a very high short interest position. Let me check BB again. Maybe the other side was wrong. I know this is much less. Okay, and then check that this is correct. 61 million. Yeah, it says 102 million shares outstanding, but as I said, not all of those are floating. Yeah, so it is more than 100% of the floating available shares. And what was the last one we talked about? Yeah, Ollie's got it. AMC is 68% shorted. And okay. That's also a much lower number. So they've got 5 billion shares outstanding, 59 million short. That's like 1%. So yeah. Okay. Yeah. I wanted to maybe like plug one thing before we finish up here, which is actually let's talk about price. So GME, as we talked about before, the price of these things, like as I said, analysts thought this was worth $10-20. It's being pushed up by Wallstreebets and by this kind of momentum that's going on. So the kind of question is, do we expect it to go back down to 20 or whatever once this is all over, which could take a long time. If you look at like other kind of short squeezes, it can take sometimes 6 months or a year before that like rights itself. Or do we expect this to stay high? So I think there's different arguments over this. You could say that this is one of these things where people, again, value the stock much more than just for its profits and revenues. Maybe they value it because they see it as being able to make a comeback. And in some ways, this could be a self-fulfilling prophecy. If GameStop stays above $100 a share for a couple months now, they'll be able to raise more money at much better rates, much more easily. And they'll be able to expand and look for new business opportunities. And if they succeed, they could have a very big business. So especially because GameStop, as I said at the beginning, has a very strong brand. So it might be that the brand of GameStop here was undervalued. And what some of these people on Reddit have discovered is that these brands really, this brand is just worth a lot more than the stock says on paper. And in that case, we might see that long term, in a year or two, that GameStop shares stay at 300-400, maybe more. And nobody knows for sure. There's arguments on Reddit, on Wallstreebets, that GameStop should be worth $5,000 a share. I have no idea how realistic that is, but of course people can argue about that. So I think the idea that and this is sort of what the mass media have pushed, that this is a short-term like panic or this kind of craze, and that'll drop back down to what it was before afterwards. I think this is not realistic. This is delusional. This is not going to go back down to $5 a share. Just because, for the meme factor alone, people are going to buy the share for years into the future, keeping the price above that level. The question is, at what level? Will it be at 20? Will it be at 50? Will it be 100? Will it be 200 or 500? And nobody can tell you that. So I think we have to wait and see. And I think it's just a really interesting story, and it's sort of just shows this kind of shaking up of these systems. And so to round it off here, I want to bring up a topic which I find really fascinating, which is the idea of like, oh, Nokia. Yes, of course. Let's look at Nokia quickly. So what's Nokia been doing? It's also, oh, is it back down already? Nokia was trading at $4 a share a week ago, and that's $4.80. So it's hasn't done much. Nokia is the one I own. Nice hooded one. Hooded one made his first $10 investing with Nokia. So I have made no money with Nokia. I bought it at I actually believe that my trading app really fucked me over with this, because I put in a set order at some 3.8 or something like that. Like it was dipping around here yesterday. It was dipping up and down, and the intraday kind of volatility was huge. And I thought I could get in at something below 4, and it didn't work. My trading app wouldn't let me put in the order. I tried a couple of times, and at some point suddenly they put me through an order above 5, like 520 or something, like, or 510, I don't know. And I was like, that's not what I wanted. I wanted it below 4. But so I feel totally screwed over by that app. So that's why some of these trading apps are not good. I'm gonna change. I'm gonna switch to a proper broker. Even though the trading apps, of course, have no fees, so it's maybe easier to make quick trades, but it's not worth it, because they have no fees. They figure out they figure out a lot of ways to save money and a lot of ways to make money, and I don't want to have any part of that. But yeah, changing the system. There's a great new book called Another Now by Yanis Varoufakis, and it's on Goodreads. This is such an excellent book. I read it in December within a few days, and I spent the last month kind of trying to write a review of it, which I'm trying to get published at the moment. What he does is he says, like, free markets are great. Yanis Varoufakis, by the way, is the economist who was serving as the finance minister for Greece in 2015 for 6 months when they were negotiating the bailout with the EU after the Greek kind of financial crisis. And he was negotiating kind of in good faith with the EU. He wrote a whole book about it, I think called Adults in the Room or something like that. And it was a total shit show. And he writes about that in great detail. But he sort of asked himself, after that sort of didn't go down as he imagined, like, what would a fairer world look like? And he's an economist, and he kind of believes in free markets, but he thinks capitalism is kind of fucking it all up. So he tries to separate capitalism from free markets. And in this book, he has this incredible kind of vision for, like, how would you have free markets without capitalism? What would that look like, and what would that be? And the way he kind of does it is it's a novel. It's a sort of science fiction alternative history novel. And the idea is that in another universe in 2008, like when Satoshi Nakamoto published the Bitcoin white paper, instead of like being against being this kind of libertarian dream, it became more of a liberal left-wing kind of dream, and people used it to like take down the financial system, and they were successful, and the story sort of then changed. What happens to the world in which Bitcoin actually, from the beginning in 2008, after the financial crisis, causes the kind of a revaluation of the whole economy, and he follows that through over the course of some years, and tells the story of what happens in this alternative universe, and it's super, super interesting. Tai Swag asks, what is the short percent of GME now? Tai, nobody knows. Now you probably weren't here when I was mentioning this before. Here's the graph for short interest, and this gets announced as far as I know, like This one is twice a month. So every 2 weeks we get information on short interest, and the latest number is 61 million, which is more than 100% still of the thing. So now the last 2 weeks, has there been a lot of reduction in short interest? Absolutely, absolutely. Do you think it's below 100%, below 100? I think you are probably right. And here's from this provider, I don't know who, Ortex, they estimate what the short interest might be. And so they have it down yesterday, or the day before yesterday, they estimated it to be below 51 million, which is still over 100%, because I think there's 48 million shares on float. So I'm not sure if it's below 100 now. I mean, it certainly should be. These people who are short selling are losing their shirt. So we can also look at what's the free float on loan. Like something like 83% of free float is on loan, 85% as of yesterday. What's the cost of borrowing? I think this is super interesting, because the cost of borrowing, I believe this is also a percentage of the share over the course of a year. And actually, I don't know if it is a percentage or a fixed number, but you can see it's tripled. It went from 10.5 to 33. So it tripled in the course of a couple of weeks since the end of last year. And of course, part of the reason why that's increased is, well, one is if there's a lot more short interest, then the cost of running those short positions will increase. But also, of course, when the price spikes, and let me add the price here. The price spiked radically here in the last week. So, then the cost to borrow goes up. That means people don't want to be short, and this is all a nice cascade. So I'm going to go into another question. NAKD, that's the Naked Bars, isn't it? Company. They were also, there is talk about that. Naked Brand Group. So let's see, 5 days. So they started out last week at 0.4 roughly, and they peaked at 3.3. So that's almost 10x. And let's see, let's look at the daily, see if we can see some pre-market as well. They're hovering around 190, 180 here. So Stanislav, good question about Nokia. There's a huge volume, not that much short. I agree. It's the short position is not big enough to really like say that there's a big potential here to do a short squeeze. It's a 1% short, so that's really not enough for a short squeeze. So Naked, I don't know. It's unlikely. I think we have to be realistic and say it's extremely unlikely that we'll see something like GameStop again. This was like a kind of once in a lifetime, or certainly once in a decade situation. And it's not finished yet. So I think we keep an eye on GME. I think the right thing to do is to, if you want to support this kind of citizens movement to screw with the big hedge funds who've been shorting this, like go buy it, go buy some options, go push the price up a little bit more, but only do it with the money you're willing to lose. This isn't about making money. It's about kind of redefining what is value. And so I'm going to close it up here by just kind of giving you my review of this book that I mentioned, Another Now, by Yanis Varoufakis, and then I'm going to close up this live stream. I'll answer any more questions that come in while I do that, we'll close it there. So here's my review of Another Now. I've written this up, so this is going to be me reading something. So hopefully that is still fairly okay to listen to. So we need bold new ideas for the Great Reset. The COVID-19 pandemic is not the first time that global events have necessitated a rethink of the state of the world. Market-driven capitalism has been the greatest engine of wealth creation in the history of the planet, and yet it has become increasingly clear that some part of our system is broken. Conflict and violence are on the rise, and democracy is retreating globally. We are living in a world in transition from the unipolar system present since the fall of the Soviet Union to a complex, multipolar world where liberal democracy is falling out of favor. Klaus Schwab, founder of the World Economic Forum, has written extensively about the Great Reset, an initiative for starting fresh after COVID-19 rather than returning to what we had before. The World Economic Forum has been a clearinghouse for neoliberal economic thought since its founding in 1971. But now, even Klaus Schwab clearly disinherits this economic paradigm. In Time magazine, he summarizes it as "the market knows best" and writes, "Those dogmatic ideas have proved wrong." Still, no clear alternative to neoliberal economic thought has emerged. While economists have found incremental improvements, there is a distinct lack of visionary thinking. What will the new paradigm of economics be? In Another Now, Yanis Varoufakis tries to answer this question. Another Now, Dispatches from an Alternative Present, is the fifth popular book by economist Yanis Varoufakis. The publisher describes it as a thought experiment, blending Platonic dialogue with speculative fiction. Varoufakis has referred to the book as science fiction, and it does have a sci-fi feel in places, especially in the context, in the conceit of a wormhole built between two parallel universes that allow the comparison between our now and the titular other now to be made by the characters. But more than that, it feels utopian. An unlikely series of events following the 2008 financial crisis causes the other now to take a different path from our own. But ultimately, this is a book about economics, and specifically a detailed proposal for a new economic world order. Varoufakis has written a lot about the financial crisis, and this expertise, alongside his political and economic philosophy, made him appealing to a new radical leftist party in Greece. In 2015, he was pulled out of academia and into politics, joining the government as finance minister. After his government capitulated to the demands of the EU, Varoufakis resigned in frustration and began trying to paint a clearer picture of an alternative future. In Another Now, liberal democracy and free markets are unshackled from capitalism. This post-capitalist society jettisons share markets, commercial banks, free trade, and private land ownership. The effects of these radical transformations are far-reaching, and Varoufakis explores them in considerable detail. Varoufakis' proposals can be seen as economic design thinking, where systems, mechanisms, and principles are rearranged to produce better outcomes. Free market competition works well for goods and services, but democratic decision-making and local autonomy are more important for property and labor. In Varoufakis' corporations, the principle of one person, one vote applies. Jobs and profits within a corporation are distributed democratically. Existing members decide collectively whether to admit new ones and can remove members who are hazardous to the firm. In the case of property, Varoufakis' proposal will seem extreme to most readers. He suggests that real estate should be collectivized under community ownership, where it is leased out to tenants through annual auctions. The community decides democratically how much property to set aside for social housing, which is apportioned by lottery. It is true that social housing has proven quite effective in some cities. Vienna and Singapore are notable examples, with 60% and 82% of all citizens living in public housing respectively. Both cities rank highly on economic output as well as quality of life. Singapore tries to encourage homeownership by selling public housing to the occupants because they want to encourage stakeholdership in society. Still, Varoufakis deserves praise for being unafraid to put radical ideas on the table. Universal basic income is another radical idea that has been gaining popularity among progressive activists in recent years. Varoufakis takes a bold approach to basic income, take the power to create money away from the commercial banks, and give it to the central bank in the form of a basic income instead. By adjusting the basic income level and interest rates, the central bank can maintain price stability even more easily than under the current system. Varoufakis also has a lot of radical and interesting things to say on immigration and international trade. He proposes that the humane principle would be to reverse the current situation where goods and services can cross borders easily while people cannot, but suggests that in practice, each district should decide for themselves whether they wish to welcome immigrants and how many. In Varoufakis' alternate universe, a grassroots movement brings about all these changes. It's clear that Varoufakis hopes to inspire such a movement in our universe too. We may not all agree with the policies exactly as he has laid them out, but no one can claim that Varoufakis, in his critique of the world as it is, has no alternative in mind. For me, I would like to read a few alternatives more. Who will write them? I hope you do. So that is my review of Another Now by Yanis Varoufakis. GME was the main topic of this live stream, and we're going to close it out here. Somebody asked, "Is GME still good buy at 330?" Listen, nobody can tell you that. What these Wall Street bets people on Reddit are doing is not buying this for the money. Some of them are, certainly not all of them are. Many of them are doing it for the memes and doing it to stick it to the man. And if you want to do that and want to lose some money doing it, then buy it at any price. But if you want to make money, then this is certainly not the place to get financial advice. I hope that's been clear. And thanks for watching. That's it for now, and see you next time. Bye.